Hello, everyone, and welcome to the weekend update. So let's take a look at the SPX market. So we are seeing that we are on a down trend line again. Now, we had been on a rather significant down trend line. In fact, I think I can shrink this up a little bit and we can see, how extensive that has been over the past months. Then we did pop out of it here. So we made a lower low. And this lower low doesn't get confirmed, by the way, until we make a higher high, which we did do. So we had I said a lower low. We had a higher low, higher low here than what we had here. We had a higher low here, but it didn't confirm with a higher high. So again, pulled back, had a higher low, went up, didn't pop through, came back, had another higher low, then we finally popped through. So that kind of gives a little bit of a confirmation, if you will, to this breakout. Then after a breakout happens, it's normal that it will pull back to the downtrend line and bounce off of that. And what we would have ideally liked to have seen if we were back in uptrend mode was another break to a higher high. We have not seen that yet. We did break back down into this prior channel. Again, not by a lot and not by a real long period of time. And then we tried to rally again, but we've kind of developed a new downtrend line here that we haven't been able to punch through yet. So we need to kind of see how this is going to play out. This is also, some people might consider this a wedge pattern that is forming here. So I should probably, in order to be accurate, take this now that we've got additional information and probably put it down more in here. So this is the wedge pattern that we have building out. And many times when a wedge gets resolved, it gets resolved with some firmness. A spike in volume many times will accompany a break in a wedge pattern. So as our market plays out over the next week or possibly two here, I would envision some sort of a break here. And when that break happens, it could happen with a sizable movement. As a result, I want to make sure that we keep our trades controlled in size and controlled in the number of trades that we actually have on. So these are our existing trades that we have on right now in the class. So this is just our flat fly, and I debated about adjusting that into a broken wing fly earlier this week when our markets were up considerably. They were up here into the lower 4,000 range. But I was holding the opinion that I didn't know if that move up was going to hold, so I didn't want to adjust. We're now going to be getting some faster decay as we're getting less than 30 days to expiration. So if we get any sort of a pullback here on this one that might get us into that 10-15% range, we do have an order setting out there. I've got an order out there to take this trade off at 1350. We're nowhere near that right now, but a pullback in the market could potentially put us there. So this one had run out of the upside. This is a butterfly with a long call. It had run out of the upper side of this butterfly, and the long call, we had two long calls up there. Those two long calls were starting to decay in a fairly sizable, what I call valley of death. And we were negative theta. This trade had gone back to negative theta because these two long calls were decaying so much. So what I did was added in a vertical here, which widened out our tent a little bit, brought theta back into the equation. So we're now positive theta. We can see here we got a 44 positive theta now. So I just need this to decay in this general range, and we should be okay. So that's what we're looking for on this one. This one actually has a shorter expiration than we are over here. So this is actually going to decay a little bit faster. This trade has also been adjusted at least 3 or 4 times. So I'm not expecting as much out of it. One of the things that happens on trades, if you have to adjust them multiple times, you need to kind of lower your expectations as to what you're going to get out of them. because each one of those adjustments, of course, ate up some commissions, some bid-ask spread, a lot of things went into that. That's just going to overall lower the potential profitability of that trade. So we'll be looking for some decay in here, getting into a little bit of positive territory, and then shutting this one down. I do not currently have an order out there on this one. This is our rut trade. It's working along nicely. It's decaying kind of right where we need it to. This is quite a ways out yet, well over about 6 weeks time frame. So nothing urgent on this one. Actually, I guess that's even longer. Let's see here. Yeah, this is almost 8 weeks out, or a little over 8 weeks out. So nothing has to happen on this one anytime soon. We're just going to kind of set and watch this decay a little bit more. Do have an order out there on this one that was actually getting close to hitting, that was going to thin this trade out just a little bit. It was just going to basically thin one of the butterflies out and just reduce the risk in the trade a little bit. This was the earnings calendar for FedEx. So on this one, we've adjusted it a couple of times. This was the adjustment that I did on this. It did add a fair amount of downside risk to FedEx, which I was okay with. And now I just need this to decay from our current 494 loss up to, a smaller loss. Then I can roll my short strike one more time on this and maybe pick up a little bit more income from rolling that short strike, a little bit more credit. I may be able to work this to a slight profitable position, but I don't know. We'll see how this plays out as these decay further here over the next week. And then finally, this is the one that is probably going to start popping off the soonest. So we did take 2 of these calendars out, I believe, hit. We float orders for these. And particularly with the rut, we want to be opportunistic. We want to make sure that we have an order setting out there, because the bid-ask spreads get pretty wide on rut. And we want to make sure that if somebody's willing to pay our price, that we have an order out there that will let them. So I've got an order out there right now to thin out 2 more of these rut trades. And we're going to see about thinning them out at $4 per. If we're able to achieve that, we will have turned this into a no-lose trade. And then we can ask for a little more money to see about getting out of the balance of this. But if that $4 gets filled on Monday, which I would think it might if we don't get any big move in our market, we should be able to pull 100% on this trade. And then we did try to enter a new double calendar on Friday. We did not get a fill. We were being patient, just letting that order float out there. Again, did not get filled. So we may try that again Monday as well and consider that getting into a new order. So that is our weekend update at this point. And if anyone, of course, has any questions, feel free to drop them into the group channel at the website. Thank you so much.